Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar saw a boost on Thursday as fresh selling pressure weighed on the US dollar. Concerns about the US Federal Reserve took a back seat momentarily as upbeat weekly jobless claims data fueled optimism for potential interest rate cuts, lifting market sentiment. According to the data, the number of Americans filing for new claims for unemployment benefits rose more than anticipated, reaching a seasonally adjusted 231,000 last week, missing the forecast of 215,000. Traders are now turning their attention to the upcoming US inflation data, particularly on the US PPI, or the Producer Price Index, and the US Consumer Price Index. From these reports, we may be able to get a little bit more assessment in terms of how the US Federal Reserve is viewing their interest rates and potential cuts. So turning to the technical, we can see that the market is still holding somewhat bullish for the Australian dollar and rebounding in front of that key level of 65.45.50 still keeps the upside objective around 67 cents and reassess from there. The euro posted an engulfing candle, and while the US dollar snapped a 3-day bull run, also posted a bearish outside range day. So from the bullish outside range day for the euro, the market is likely to see further gains and looking on towards 108 to 109, and the dollar index likely to tumble further from 105.20 down to 103. Any pullback is likely to be shallow. With the dollar index taking a slight backstep after its 3-day gain, could see a little bit more in terms of weakness for dollar yen or yen strength, and therefore look away from this 155.45.65 area and look back towards the downside of around 154, and still keeping in mind the objective around 150.5 to 151. As widely expected, the Bank of England kept rates on hold, and from there the market posted an engulfing candle that could see further gains. But I would like to see the RSI pick up a little bit to the bullish side and therefore look back towards 126 and on to 127. So from the dollar weakening, gold snapped to the upside and posts a fresh gain and breaks above 2,329.33 and now leaves me neutral. I would like to see a little bit more in terms of technical implications of direction, and I'm not seeing that now, so I'd rather sit out for the moment. Along with a break above 33 gives me a neutral bias. Although we have seen 2 days of strength for oil, I'd like to see this pattern continue. And if it doesn't on Friday, then we may see some weakness back into next week and look down towards $75 a barrel. But let's see if the break of $79 can continue on and look towards this resistant line around 81. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.